All right, starting off with topic 3.1. Topic 3.1 talks about the rules, but before we get into those rules, we're reminded that the Securities and Exchange Commission, or the SEC, they're that independent federal agency tasked with the oversight of publicly traded companies, And this is because they have some goals, right? They want to make sure that investors have trust. Investors trust the financial markets. Because if they don't trust the financial markets, they won't be investing, or the demand won't be there, and we will see another stock market crash like we did in the 1930s, and then the economic effects of that. So obviously the SEC wants to make sure that that does not happen again. They want to avoid any financial turmoil or economic turmoil. Right? They want to make sure that investors trust the financial markets. And they want to and part of how they do that is by providing oversight to public companies, making sure that there are laws and regulations for companies to follow. Create laws and regs and this is the public companies. Your small businesses, they are not going to have to abide by these federal regulations. This is for the publicly traded companies, the ones that are sold on like the New York Stock Exchange, for example. Okay, and so the Securities and Exchange Commission said, we want to make sure that these laws and regulations meet certain objectives, right? Because again, we want to make sure that our investors trust in the financial system. So we want to make sure that companies are putting forth transparent information that's verifiable. They want to make sure that it's relevant. They want to make sure it's consistent. Make sure it's comparable and timely. So those are some of their key qualities. They say whatever future laws or regulations we come up with, we want to make sure that it kind of ticks off these boxes because we want to make sure that the information that we're putting forth, meets these objectives. It's transparent, verifiable, relevant, accurate, consistent, comparable, and timely. Now, in terms of coming up with the accounting rules, they're going to kind of outsource that. So they're going to outsource the creation of the accounting rules. And that mostly has to do with the fact that the SEC, right, they're federal, officials. They don't necessarily have CPA licenses or an accounting background. So they're going to lean on some accountants. So let's talk about who they're leaning on to create those specific rules. They're going to lean on an organization called FASB. That stands for the Financial Accounting Standards Board. And they are a private agency, private board. Okay, and so they create new accounting rules. They also provide interpretation of existing rules, which is pretty much like a clarification. Interpretations, okay. So that's the agency that they rely on, the Financial Accounting Standards Board. And this, I should say, is just in the United States. Other countries will have different agencies, obviously different federal agencies, and then also different agencies to create those accounting rules. And that's covered in Chapter 3 if you want to read more about that. We're going to focus on the U.S. institutions. All right, so we said they create those accounting rules. So the accounting rules that they create are called GAAP, and that stands for Generally accepted accounting principles. And the reason it still has that name to this day is before FASB started creating new and specific rules, they just kind of got together and said, what are some of the rules that the profession has just been using that they have generally accepted over years and years of practice? And that's kind of where they started. And so what they do, what generally accepted accounting principles is it provides guidance. So these principles provide guidance for reporting transactions and presenting financial information. And presenting financial information. And so the nice thing is, if we're ever, recording a transaction and we're like, gosh, I really don't know what to do. I have this very complex transaction. I have no idea how I should record this. I've never seen anything like this before. That's when you turn to the generally accepted accounting principles. There are so many rules. If you were to list all the rules, you would come out with about 25,000 pages. That's how many rules there are. Obviously, we are not going to learn all those rules. We are just going to talk about some of the broad guidance that is available through the more generally accepted accounting rules. So we will do that in our next video.